Gold just hit an all-time high. Stock market? Also at an all-time high. Unemployment? Lower than it's been in 50 years. Inflation? Coming down. Banks? Profitable. So why is the thing people buy when they think everything's about to collapse also going up? Someone knows something, or more accurately, a lot of someone's know something. Central banks, hedge funds, governments that haven't trusted each other in decades. They're all buying gold like it's 2008, except none of the alarms from 2008 are going off. The economy looks fine. The charts look fine. Your $4 lakh of savings probably looks fine. But gold is screaming. Let's rewind for a second and talk about what gold actually is. It's a rock. A soft, heavy, yellow rock that doesn't corrode and doesn't do much of anything except sit there looking expensive. You can't eat it. You can't burn it for energy. For most of human history, its only real use was looking pretty and being rare enough that everyone agreed it was valuable. And that's the point. Gold isn't valuable because it does something. It's valuable because for 5,000 years, every civilization that rose and fell agreed it was valuable. Empires collapsed, currencies turned into wallpaper, governments disappeared overnight, and gold just kept being gold. It's the closest thing we have to financial immortality, which is why when gold starts moving, it's worth paying attention to what it's moving away from. Right now, gold is up nearly 40% from where it was 2 years ago. That's not normal. Gold usually moves slow. It's boring. It's the asset you buy and forget about while the rest of your portfolio does the actual work. But in the last 18 months, central banks have bought more gold than they have in over half a century. China, Russia, India, Turkey, Poland, even Singapore. Countries that agree on almost nothing are all doing the same thing. They're converting their dollars into gold. Not some of their dollars, historic amounts of their dollars. In 2023 alone, central banks bought over 1,000 tons of gold. That's double the average of the previous decade. And they're not slowing down. So the question isn't whether something's wrong. The question is, what do they see that we don't? Here's where it gets interesting. On paper, everything looks stable. GDP growth is positive. Credit markets are functioning. The dollar is still the world's reserve currency. Every other country still needs dollars to buy oil, to settle trade, to play in the global economy. But there's a pattern happening underneath that most people aren't watching. It started in 2022 when the US froze $300 billion of Russian central bank reserves. Not Russian oligarchs, not Russian companies. The Russian government's actual savings, held in dollars and euros, frozen with the press of a button. It was a powerful move. It was probably the right move. But it also taught every other country on earth a very simple lesson. Your reserves aren't really yours if someone else controls the system. The global financial system runs on dollars. In about 60% of all foreign exchange reserves, about 90% of all foreign exchange transactions, about half of all international loans. Dollars. This gives the US extraordinary power. If you want to do business globally, you need access to the dollar system, which means you need access to American banks, which means you play by American rules. For decades, this was fine. The rules were mostly predictable. The system was stable. Everyone complained about it, but everyone used it. But after 2022, a quiet shift started happening. Countries that weren't necessarily enemies of the US, but weren't exactly allies either, started looking at their dollar reserves and asking an uncomfortable question. What if we're next? Gold doesn't have that problem. Gold can't be frozen. It can't be sanctioned. It doesn't care about your politics or your alliances. A gold bar in Beijing is worth exactly the same as a gold bar in London, and nobody needs permission to move it. Now here's the uncomfortable math. There are roughly $13 trillion of foreign exchange reserves held by countries around the world. Most of it is in dollars or dollar-denominated assets. Treasury bonds mostly. If even 10% of that starts rotating into gold, that's over $1 trillion of buying pressure on an asset that only sees about $200 billion in annual demand. It doesn't take much to move the gold market. It's smaller than people think. The entire above-ground supply of gold ever mined in human history is worth about $15 trillion. Sounds like a lot, until you realize that's less than the market cap of Apple and Microsoft combined. A small shift in demand creates a big shift in price. And the demand isn't coming from retail investors watching YouTube videos. It's coming from central banks with trillion-dollar balance sheets making decisions they don't announce in press releases. Here's the irony. Gold is going up for the same reason Bitcoin went up in 2020 and 2021. Not because the asset itself changed, Because trust in the alternatives started to crack. People bought Bitcoin because they didn't trust central banks. Now central banks are buying gold because they don't fully trust each other. It's the same instinct, just at a different level. And the weird part, the financial system isn't collapsing. It's functioning exactly as designed. The stock market is fine. Bond markets are fine. Credit is flowing. But gold doesn't care about credit flows. Gold only cares about one thing: whether the system stays predictable, and predictability is getting expensive. Let's talk about what happens if this continues. If central banks keep rotating out of dollars and into gold, it doesn't break the dollar overnight. The dollar is still too useful, too embedded, too necessary for global trade. But it does something more subtle. It fragments the system. Countries start holding more gold, fewer treasuries. Trade starts happening in yuan, in rupees, in euros, in bilateral agreements that bypass the dollar entirely. Not because the dollar failed, but because the cost of depending on it got too high. This has happened before. In 1971, the US ended the gold standard because too many countries were showing up asking to convert their dollars into gold. The US didn't have enough gold to cover the dollars it had printed, so it just stopped converting them. The dollar survived. Actually, it thrived. It became the reserve currency without needing gold to back it, purely on the strength of the US economy and military. But that was 50 years ago. The world had fewer options. There was no euro, no digital currencies, no alternative payment systems. Today, the options are multiplying, and gold is the asset countries turn to when they want to keep their options open. There's something almost poetic about this. Gold is ancient. It's analog. It's the opposite of everything modern finance is supposed to be. And yet, in a world of instant transactions, digital currencies, and algorithmic trading, it's gold that central banks are hoarding. Not because they think the future is going to look like the past, because they're not sure what the future is going to look like at all. So here's the question nobody's asking out loud. If gold is rising because smart money thinks the current system is fragile, what happens when that fragility becomes obvious? Do we get a crisis? Do we get inflation? Do we just get a slow rebalancing where the dollar shares the stage with other currencies and gold sits in vaults appreciating quietly? Or do we get something weirder? A world where the financial system works fine on the surface, but underneath, trust keeps draining away, and everyone who can afford to is converting their faith into something they can hold. The economy isn't broken, but the bet against it being unbreakable just became the most popular trade on the planet. Gold knows something. The only question is whether the rest of us will figure it out before it's too late.